I'm Rich Harvey, CEO and founder of Propertybuyer. After spectacular price rises in 2021, when can we expect to see the market starting to cool off? My team is seeing continuing demand for high quality property. The talk about interest rate rises has not deterred the majority of buyers. In Sydney, the number of buyers that open for inspections has declined a little, and the frenetic pace of bidding at auction has slowed down a bit. But price guides are becoming more realistic compared to last year, when the sale results were 15 to 20% above the price guide. In Melbourne, there's still strong demand. Stock levels are still tight, but there's no signs of price reductions, and the Melbourne market is holding steady. In Brisbane, it's a hot market. We're seeing queues of 50 groups lined up for inspections and a mini traffic jam in the street. Prices are rising with high demand from both owner-occupiers and investors due to a lot of interstate migration. So we can't stereotype the status of the property market with just one cliche answer. So what are the things to look for to show that the market might be cooling? Things that I'd be looking for were median prices slowing, days on market increasing, auction clearance rates starting to trend down, attendance at open homes declining rapidly, the number of bidders at auctions are dropping off, and also this one, sales agents desperately calling buyers to bump up the numbers at auction. ANZ Bank recently revised their property price forecast upwards for 2022. Most economists suggest that once we get 2 or 3 more interest rate rises, then we should start to see the market cool. But there's still capital growth left in the Sydney, Melbourne and Brisbane market during 2022. Even if we do get a slight correction in 23, this will only even out the gains that are coming this year. The latest State of the Nation report predicts that demand will totally outstrip housing supply over the next decade. Net overseas migration is expected to fully recover to around 235,000 people by around 2024. Each year over 180,000 new households are formed, and by the year 2032, it's expected there'll be a cumulative shortage of around 164,000 dwellings. So if you think that sitting on the sidelines waiting for a market crash is a smart strategy, then I'd rethink your position. The long-term drivers of capital growth will swing back into action over the next 10 years as we enter the next phase of the property cycle. And buyers that continue to sit on the sidelines are going to miss the boat. With some buyers potentially sitting on the bench for a while, you may be able to just get a chance to get a foothold into the property market. I'm Rich Harvey, thanks for watching.